Hey everyone, welcome to Couloir Mining Talks. I'm thrilled to have with us Mr. Joe Ovsenek, CEO of P2 Gold. Couloir Capital initiated research coverage for P2 Gold back in November 28th, 2024, with our analyst Tim Wright covering the report, which concluded a buy recommendation through relative valuations based on the stated resource. Today, I've got Joe with me, who's got over 20 years of leadership in the precious metals industry. Joe has a remarkable track record of taking exploration projects from concept to production, and he previously served as a president and CEO of Pretium Resources, where he successfully led the development of the high-grade Brucejack mine, now a profitable operation. Joe's extensive expertise and vision make him a standout leader in the mining world, and I'm excited to dive into his journey and insights today. Joe, welcome to the show.
Great to be here.
So let's begin from a little bit on your personal background and your history, how you got into this industry and how has that journey led you to P2 Gold?
Yeah. Well, that's a lot of mileage going back, but I worked when I was in engineering. I worked a summer up at the Grand Duke mine in the Golden Triangle. Loved it. Really enjoyed. I loved the north. The Golden Triangle is a beautiful spot. I enjoyed the town of Stewart, and so when I had the opportunity, I eventually gone back to law school. When I had the opportunity to go work at Silver Standard Resources back in the mid 90s, I jumped at the chance and haven't looked back. So great industry to be in, great people, and you get to see things that most people don't get a chance ever to see. So it's been good.
And how has that journey led you to P2 Gold?
Oh well, look at we were running. Well, we were Silver Standard. We have a team that's worked together for quite a while. Ken McNaught and I have worked together since '96. And so at Silver Standard, we built the company up from about a 50 million market cap to a couple billion. We had placed the Perdidas mine in production. We were drilling off the Snowfield and Brucejack project up in northern BC, which we owned in Silver Standard. Ken's team discovered the Brucejack, the Valley of the Kings, which became our Brucejack mine. And with that discovery, our board said, look, we're a silver company, we have to sell it. So we sold it to another company that we set up, and we moved over there and we moved it on. Pretium Resources grew. We took it from discovery to production in under 8 years. And then after leaving Pretium, we wanted something else to do. We wanted to come up with another project to build. So we formed P2 Gold, and we acquired the Gabs project down in Nevada.
Mm-hmm. And with gold being the core focus of your current company, how do you see the role of precious metals evolving in today's economic landscape? Perhaps if you're looking at any secular trends that might be forcing, considering today's market situation.
Yeah, well, I think what we're seeing, and you can see it in the price of gold over the last year, 2 years, is this, we've got a bit of a rupture between the blocks of countries. We've got the West, we've got Russia and China, maybe Iran, and so they've got sanctions on them. They can't use the SWIFT system, so they're looking for alternate investments for reserves other than U.S. dollars. Because look what happened to Russia once they invaded Ukraine. They had U.S. treasuries. They were all cut off. So I think gold is going to continue to be strong, especially as we see this bifurcation of the world's economy, and you're going to see more and more investment in gold. And I think at the current price, which is just a shade under $2,700 an ounce, I think looking back, we're going to see that as being actually relatively cheap. So I think it's a good time to be in gold. It's going up from here.
Right. And what's the overarching vision for P2 Gold, and how does the GAPS project fit into that strategy?
Well, they work together. We want to take P2 Gold to move it forward and become a producer. And we think Gabs is a great initial project for us. We picked it up. We looked at a lot of projects back when we set up P2 Gold. We like Gabs in particular. Two things stood out for us. It had a significant gold copper resource already on the property, roughly 1.8 million ounces gold equivalent. But looking at the data, looking at the geology, we could see 4 to 5 million ounces near surface, so lots of potential. And the other thing we liked about it was infrastructure. We can drive to the project on pavement, actually right onto the project on pavement. There are roads all over the project. Coming out of the Golden Triangle, it's a tough place to operate. It's a very expensive place to operate. And so when we set up the new company, you could see the market. There's not a lot of cash available for junior companies, especially now. And so exploring and trying to develop in the Golden Triangle is, unless you come up with a fantastic discovery, it's really, really tough slog. And so the nice thing about Nevada, we can drive there. It's great infrastructure. We have water. So a lot of things going for the GABS project. And we think that's something that we can take from, once we can move, at the stage we're at now, conceivably we can be in production in 4 years, subject to getting their financing in shape.
You just mentioned there might not be a lot of cash available for projects of this sort, so I just want to explore that a bit.
Yep.
In terms of capital and funding, with GABS moving forward, how's your approach to funding the project look like? What's the capital strategy, looking like for P2 Gold?
Well, for moving forward, right now we've cut a deal. We announced back in early December where we're selling our Ball Creek claims, which are up in the Golden Triangle. And look, we like the Ball Creek claims. We think there's a lot of potential, but as I mentioned, the Golden Triangle is just an expensive place to operate, and it's just not something for junior companies at this point in time. So we're selling that roughly for what we paid for it, $1 million. We're going to take that $1 million, do another round of metallurgy at the project, get our water wells re-permitted. Water was permitted at GABS in the 90s, so get the water in place, get the metallurgy done, and then as we move forward, we'll look at either selling a royalty to go through feasibility. We're also, talking with people. There has been some interest in joint venturing on the project, so we'll pursue that as well. Management has a significant stake in the company. We're at 22, I think off the top of my head, 22.7%, and we've funded the company essentially for the last a fair bit of the company for the last 3-4 years. So, well, since startup. So I think if we can cut a deal that makes our shareholders happy, that it's beneficial to all shareholders on a joint venture, you could see us doing something like that. But let's get our metallurgy moving forward, and we'll go from there.
Right, and just talk about the management, which seems to be one of the most attractive variables that P2 Gold has. How has that experience shaped your approach to exploration and project development?
I think well, we back, if you go back to Silver Standard days, we looked at a lot of projects, bought a lot of projects, but looked at probably 10 times the number we purchased. So you quickly realize when you're looking at projects, I think one thing you'll see in the junior world is people get a project, they're committed to it, and they keep drilling it. And if you look at it objectively, it just doesn't have the economics to make it over the threshold of making it to producer. And so what we've learned is you got to go in, test a project hard. If you think it's going to make it, great, keep moving forward. But as soon as you realize, look, this doesn't have the economics to make it, move on. Because it's never, once a project's marginal, it's going to stay marginal unless there's some big change. And that's what led us to GABS. It was a marginal project in the 80s and 90s. And in the late 90s, mid to late 90s, they developed the SART process, which allowed you to process copper gold deposits without high cost for cyanide. And that was the game changer for GABS. And that's what's allowed us to move it forward and improve the economics, where we expect GABS to be a mine, and we don't expect it to be that long from now.
And what are some of those variables in the fundamental economics of any project that make or break it?
Well, there's always grade. If you have enough grade, you can pretty much overcome anything. Like with the Bruce Jack mine, we were high grade. That allowed us to put in a 75-kilometer road. 12 kilometers went over a glacier. This is all high cost. We built a 110-kilometer power line, sorry, a 57-kilometer power line cost us $110 million. But if you have grade, you can make it. If you don't have grade, well, then you got to look at, okay, what's the infrastructure like? If you don't have to build a road, if you don't have to build a power line, well, that all helps the economics. So there's a number of variables, but grade is king. But if you don't have the grade, there's a lot of other things that make a project maybe doesn't have the grade, but can be a solid mine just because it has a lot of things going for it.
Yeah, I'd love to talk about those variables. You mentioned the jurisdiction, the infrastructure, as well as the grade itself. Considering your PEA came out and it looked very promising for GAPS specifically, showcasing an after-tax net present value of US 292.2 million and an internal rate of return of 17%. What are some of the next steps in advancing the project, and what milestones should investors look for?
Well, we're about to initiate it. I'd like to say imminently, but the labs are busy. So we're in the queue to initiate another metallurgical program, and that will be the last bit of metallurgy we'll need prior to getting into feasibility study. So metallurgy coming up, with luck, we're starting it in February. That's about a 6-month. But it's 3 months for columns, prep work, 3 months, and then report writing. So it's about 6 months till we have the results out of that. We are in the process of re-permitting the water wells. We'll be drilling some water wells at the site. And so those are sort of near-term catalysts for us. I think what we'd like to see, is another round of drilling at the project. Right now, our resource is, I think, 3.45 million ounces gold equivalent. Now that's in indicated and inferred together. The indicated is 1.12 million ounces gold equivalent. So that we have potential to go up to 4 to 5. We can see fairly easily on the near surface mineralization. There's also potential for blind targets. All our zones of mineralization come out outcrop at surface right now, but there is potential for blind targets, and there also is a porphyry sitting down to depth on the property, we're fairly certain. So there's a lot of potential on this property, but you can keep drilling forever. What you really need to do is you get in production, start getting cash flow come in, and then you can look to expand your resource. You can look for the source porphyry. But look, let's get into production, start generating cash, pay off the build, and then you have cash to move things forward.
Right, and the jurisdiction being one of the most important variables that make or breaks a project, right? So
Well, we think so. Look,
right.
There's guys operating. We've operated, Africa, Far East Russia, Australia, all over South America, and the more you do that, the more you realize how good it is, how good you have it at home. And so Nevada, great place, always ranked up at the top for jurisdiction for mining. And you don't have to look too far to see problems out there. Look at Mali right now. You've got them putting out a warrant for the arrest of Bristow, who runs Barrick, and essentially expropriating their mine. Well, they're taking the gold from the mine. So that's what happens when you're in jurisdictions that you don't have a solid rule of law. So Nevada, solid. We know what we're getting into. You know what the rules are, and you know that you have courts that will protect you if a local government tries to do things. So I can't speak to jurisdiction enough. It is important.
And in terms of risks and challenges, what are some key challenges you foresee in advancing GABs, and how is P2 prepared to address them?
Well, from our perspective, we've looked at the project. There's been a lot of work done on the project in the past. So there's a lot of the project really has been de-risked. The real risk for us is, how quickly can we raise the capital to move this project into production? And that's the risk for us. The market, if you're familiar with the junior market, I'm sure you are. It's not the best right now. I sort of see this as, you can see by the gray hair, I've been in this business a while. This reminds me when it comes to junior exploration of say 2000, 2001, where it was a bit of a desert. And then things turned and everything took off. The only difference now is that gold was 250, 260 then, and now it's 10 times
Mhm.
10 times as high. But in essence, the market's the same. And so once we can get through this, or the way we're going to deal with it, and the way we're looking to deal with it is either to joint venture the project or sell a royalty. You have to dilute somewhere.
Mhm.
We think the dilution at the project level, either through a joint venture or a royalty, is less severe than the dilution you would see if we tried to raise cash. At our share price is fairly beat up, so less dilution going this route.
And in terms of strategic partnerships, such as with local stakeholders or industry players contributed to P2 Gold's progress?
Well, I would say for P2, Ken and I have done the majority of the funding. That's why we own 22% of the company. So we haven't really had people in behind backing us. We started the company up, we picked the project, and have moved it forward, and we'll continue to do that. And we're behind the company. We're completely vested in the company and well incentivized to move it forward with our share ownership.
Well, Joe, thank you very much for your time. Just one final question. What is one message you'd like to leave with listeners about P2 Gold and its potential in the mining space?
Well, I think the message is that our current market cap, I believe it's around $9 million. We're very undervalued. I know everyone says they're undervalued, but we are undervalued as we believe GABs. We've built a couple mines, and we expect GABs to be a mine, and it's just a question of getting the financing. So it will be a mine, and there's good value in our shares right now.
Well, thank you very much, Joe, for sharing your incredible journey and shedding some light on the exciting future of P2 Gold and the GAPS project. It's very inspiring to hear about your leadership, how it's continuing to shape the mining industry. And to our listeners, stay tuned for more insights from mining top leaders on Couloir Mining Talks. This is your host, Vaibhav. Until next time.